a judge recognizes the Aboriginal title over, in this case, a parcel of land in Richmond, British Columbia that represents about 1,850 acres or something like that. The point of that is that this is just one specific area, but all of British Columbia is really arguably would be owned by and or the indigenous tribes. So there's the Cowichan tribe was just this particular tribe, but there's all the other tribes that align with this really have this ruling puts everybody, what I think it's called, and I'm not good at this part of it, but it's fee simple titles in the city of Richmond. But all of British Columbia is at the effect of this because all the other tribes, if they align,
all of Canada would be right.
Yes, but British Columbia particularly because of the history of it is my understanding of it.
So are you saying that if they recognize that as essentially they have the rightful title of that land, meaning the current title owner is not the rightful title owner? Is that what you're saying?
It means that arguably the Aboriginal land rights supersede what would be called fee simple ownership.
I don't know what that means.
It means that you have a title to a property that is overlapping with somebody else title to the property. I would almost compare it to an easement. Like, right, if you don't have an easement and you're having to cross somebody's property, guess what? All of a sudden you can't get to your property anymore. This is a little bit of that. You own the land, you've paid for the land, you've got a title that says it's your land, but it's layered on top of somebody else who owns the land that hasn't actually given the provincial government permission to sell the land, technically.
The complications there are monumental.
They're monumental. So the question is,
if it goes that far, or if it
but here's the thing about what's so twisted about it is that the BC government is actually taking it to court to fight it, but they're the ones that opened up the door for it. So it's so messy. But here's the thing about it that we have to consider, and that is that when you have this kind of uncertainty, what happens to any money that's coming into the province? It stops, because it's not just homeowners that it affects business owners, it affects like everything. So all of a sudden that uncertainty, well, if you're a multi-billion-dollar corporation, are you going to risk opening a business in British Columbia? Are you going to risk buying a bunch of real estate to set up any kind of manufacturing? I don't know, whatever the case may be. Because now it's all up in the air, and it'll take years in court. These things always do.
If that's the case, and if it goes as negative as it can, let's just play that game for a second. Even leases, like the whole fucking thing becomes null and void.
Totally.
And what land doesn't belong to a tribe at some point? None of it. It's all belongs to the tribe at some point. I mean, they were here first, so it's all there.
Yeah, but here's the debate, JG. Yeah, they were here first, but many countries were overtaken in wars and battles, and indigenous fight that the land was stolen from them. But it was actually, and this is where it gets a little bit messy, because if you look on the other side of that coin, when you look at history, they're actually saying, no, that was an agreement. And of course, the indigenous says, well, the agreement was forced upon us. I think there's some kind of argument there. I don't know enough about it, but we look at on the surface of it, they're going, we were here first, you kicked us off our land. But it wasn't quite that simple. There was agreements. There was, representation, probably Indian, whatever the chiefs of those tribes were, sat down, with whoever was representing the government at that time and said, okay, well, this is what we're going to do for you. They agreed to it, whether they felt. Long story short, that's the debate. Did they agree to it? Was it a pact, or was it really stolen? I guess the side of the coin that you listen to, I don't know.
But we're talking about, hundreds of years of like unpacking and opening up. I mean, this is nothing but just straight up messy. I mean, this is never going to resolve well.
No,
ever.
But here, okay, so
it's impossible.
Yeah, there's a couple parts to it, right? So first off, the court ruling actually emphasized that what they said is Aboriginal title is a right to fee simple title. In other words, Aboriginal title is full ownership of the land. What it didn't do was invalidate or revoke what private owners have right now. So they didn't go all the way, but they did acknowledge the Aboriginal rights to those titles. So this goes back to what I said earlier. You own this piece of land, but underlying all of that is the reality that the court just awarded Aboriginal rights to their title. So, lots of.
And what does that mean, right? Like, what can they do with that? Is there any can they do anything with it? You know what I mean? Like, it's such a messy
Well,
thing.
can they? Well, goes back. So Kevin O'Leary, says I only look at what he calls a signal and noise, and he's and I agree. It's no different than what's going on with U.S. and Canada right now. It's all a negotiation, and we don't know where the negotiations are going to go. But ultimately, we have to look, and it doesn't serve anybody, and it certainly doesn't serve the Indigenous community in any way to say, okay, well, we own all that land. Okay, so now what? I think it's going to boil down to money, and it's going to boil down to government writing checks to pay for whatever Aboriginal tribes believe they're entitled to. They don't. What are they going to do with the land? There's people there, they can't do it. It's going to get straightened out one way or the other, but it's going to boil down to provincial and federal governments writing checks.
But you're right. The real impact is just like, again, another reason to slow down foreign direct investment, another reason to slow down investing in real estate, another reason to be cautious, another reason to be scared. That's all. That's just another reason.
We use the term, of course, as clarity equals velocity, and confusion equals or creates chaos. And that's what we're in right now.
Yep. Chaos, chaos, chaos.
Oh, and by the way, just to expand on that a little bit, we look at it from investor point of view and or, private ownership, families, et cetera. But don't forget, this includes all government-owned land and buildings.
Yeah, that's right. Oh no, for somehow that won't be the case though, Patrick. Somehow they'll whittle their way around that one.
So that's what's going on in British Columbia, and we've got our Premier Eby to thank for all that. It's so easy to trash talk politicians these days.
I think Mark Carney's going to come out with his new budget here shortly, so it's all going to be okay, Patrick. It's all in the budget. It's all in there.
Well, guess what? There's not enough votes to approve the budget. So now they're lobbying or whatever they're doing in behind the scenes, trying to get NDP or Quebec or whoever to kind of, there's some risk to the Liberal government of some midterm election or however they get these things handled.
Oh boy, here we go. Let's do it. In today's episode, we're covering a ton of awesome topics like British Columbia real estate investors and property owners. They just got pitched a serious curveball. And where the interest rate's heading, we don't know, but this week is the next interest rate announcement, and I think they're going, I'll tell you on the show.
Okay, and Canadians believe their standard of living is absolutely tanking, JG, which would kind of imply that the economy is tanking too. Is it? And we have to talk about the CPI, or do we continue to call it the CP lie?
Ladies and gentlemen, welcome to episode number 76 of Rewritten. Patrick, let's do it.
As always, we're inviting you, please subscribe, listen, comment, hit that bell so you get notifications, get those algorithms fired up, and get this message out there.
All right, Patrick, I want to start by actually thanking all the listeners and everyone watching for all their amazing comments. I mean, I just love seeing all the comments. So thank you so much, guys, for commenting. It's a huge help. Now, Patrick, I think we should really start by talking about this recent court ruling where BC real estate investors, they've been throwing this curveball. And it's not just for real estate investors, not just for guys like you and me and other investors that are listening to the show. This is property owners, like people who own their own little single family home, their own little condo. I mean, this could have, pretty crazy repercussions. Personally, I think we were talking about this off air a while ago. And I think you're right about how it's being used. And I'll let you speak to that. But this has some pretty major repercussions. So why don't you start by kind of setting it up, what happened, and then let's get into kind of what this could mean for everybody, because this will make a lot of noise, especially as it gains traction. This is the kind of story that gets blown out of proportion and definitely has often a huge negative effect from a news cycle perspective, and maybe not so much an actual perspective, but the news cycle just feeds off shit like this. And so set it up for us, Patrick.
Well, so first off, we asked the question, is it a noise or is it signal? That's a Kevin O'Leary phrase. Right now, we have to be paying attention to it because it does impact a lot of things. So first off, what happened was the Cowichan tribes, we talk about land acknowledgements, First Nations, they literally got what's referred to as a landmark judgment. It's a big deal. Supreme Court of British Columbia that recognized the Aboriginal titles over what is a huge parcel of land in Richmond. So like a couple thousand acres. And the implications of that, however, are that all of British Columbia would fall under that kind of same thing. So basically, what they're saying is whether it's municipal, federal, private, they have the rights, the title to all land. Now they're saying in Richmond, but the implications are that there are other tribes, of course, across British Columbia that will use this. This will be a precedent for all Aboriginal titles in British Columbia. So it's all to say this: you own a house, you own a property in Richmond right now, and ultimately you have a title for that piece of property. You've been paying taxes on that piece of property, and the provincial government or the judge, the courts said, no, well, you do, but that title is on top of the Aboriginal titles, in this case, the Cowichan tribe. So this could play out right across. So do you own the land or not own the land? It is really the real estate market regarding what they're referring to as fee simple ownership means what is happening is the Aboriginal titles are overlapping with existing titles. So in all aspects of what's going on in British Columbia right now, that level of uncertainty, even if it's just noise, people are touching the brake. And I mean people as in businesses, because you think about investing into British Columbia, moving your business into British Columbia. Now they're going, no, I'm not coming in. As a matter of fact, already money has started to leave the province, and I'm talking about corporate dollars. So this is a really big issue. It's going to drag out for another freaking 100 years, and Canada is setting precedent. I also see where Australia is now looking to Canada, because if this doesn't get handled in Canada, it's going to hit Australia. These are all things that are happening in this land acknowledgement, the Aboriginal rights, treaty rights, all of the things. It's a very complicated, and I don't profess to understand it, but I do know enough to say this economically will be bad news for British Columbia for the next little while, because as they say, uncertainty creates chaos. As I say, uncertainty creates, or confusion creates chaos. And right now, everybody's confused. And guess what? Nobody's going to do much until we have a very strong handle on this. So money's leaving the province. Not good economically. So JG, you're sitting at home one day, kids come in the house and go, hey, there's mail. And you open your mail and you are owning your property, and you've just been notified in writing that you may be affected by this ruling that, oh, by the way, you own a house in Richmond. Well, you might just not own the land that it's sitting on. And so you just open that mail. How do you feel about that?
Listen, there's number one, I can't even start to uh, get close to the challenges and the issues, between the tribes and the land and all that, the stuff that's happened in the past. I can't go there. I'm not an expert on that, so I'm not going to go there. What I will talk about is, if you think about what you just said, Patrick, and you and I know this because there are lots of properties in Alberta, there's properties in BC, there's properties in Ontario where you own the building but not the land, and all of those properties are significantly undervalued compared to another property that you own the property and the building. You know what I'm talking about? So the impact is a massive, drop in value of properties if that's the case. But this is the kind of thing, Patrick, like I love this message that they wrote here, which is like the ownership could be negatively impacted. I mean, what the hell does that mean? I have no idea. But what drives me crazy is this is going to do nothing but hurt, and everything that it touches in its wake, in the sense that it's going to slow down investments, going to slow down people from moving. It's going to slow down foreign direct investment. It's just going to slow everything down. And shit, we don't need more reasons to slow things down. That's for sure. It's already slow enough as it is. Um, and
Well,
and
okay,
and
but
the fact is,
okay, but
but
there's
I think you nailed it. I think you nailed it when you said it's going to take 100 years to get worked out, and it probably is going to take 100 years or 50 years, and it's like, so we're having all of this negative effects today for something that won't get solved for 100 years, and in fact, you and I will be long gone, and it still won't be solved. So it's a hell of a predicament, and I think there's a lot of these kinds of things right now in the world, and it's certainly not helping anybody, and it's complicated, that's for sure.
well, I mean, it gets really complicated. So, like, make sense of it. So, first off, the actual Supreme Court of BC actually they highlight it that Aboriginal title is a right to fee simple title. In other words, Aboriginal title is full ownership of the land. Full stop. That's what they said. Now, so think about that for just one other second. Now, the province comes back and says, well, we're going to appeal that decision. But it was the province that opened up the door to even have this happen. They were the ones that kind of already had these agreements. This was, and I don't know if it was all EB, but he certainly was the one that kind of pulled on that thread a little bit, and it went down this whole path. But think about one other fundamental thing. Who owns the mortgage? Well, hold it. I've got a mortgage on this property, but how can I have a mortgage on this property? Arguably, I don't own the land.
Yeah,
This
that's right.
Cowichan tribe owns the land. Well, okay, if I move out, who's taking over? Are they paying the
Yeah,
mortgage?
I
Like,
guess, do they got to pay the mortgage? Maybe they
what's
got to pay the
happening?
mortgage, Patrick.
Why am I paying their taxes? Am I leasing it from them? Is there some kind of a lease agreement
This
that
is
I'm going
what
to
I'm
have with them?
saying.
Yeah.
That's what I'm saying. Like, the implications to this are incredible. I said this on previous episodes, but the thing that people don't understand is that real estate is the backstop of all financial systems. It is literally the thing that the entire world is built on. You know how much various layers of debt is secured against real estate? It's incredible. And if you threaten that very foundation, I mean, I don't even. I mean, I really got to think about it in terms of what the possible effects are. But it could be ugly as hell, that's for sure. But I think this is probably. I think there's a lot of noise to this, Patrick. I agree, it could have, but if I said signal or noise here, I would say 90% noise, 10% signal. That's my call.
I don't disagree. But in the meantime, things are stalled. It's going to take some time for this to all settle in. It's no different than what's going on when we can transition into the whole issue about tariffs. And, it's Trump's fault that things are slowing down and all the stories that we have around that. We can get into that. We don't buy into that at all. But the point is this: in the time of uncertainty, a confused mind says no. And that goes for investors, not in just in individuals, but this is large corporations. So if you're sitting in with a bunch of shareholders in your corporation, where are we going to invest billions or not? A confused mind says no, and that's what's happening right now. So when we think about what's happening economically, this is just one other thing that's happening in Canada right now to slow down and actually bring this economy to a standstill, which is actually happening, and we're seeing it. The numbers are kind of illustrating that we're slowing down, and that's where we're at.
But Patrick, don't worry. Mark Carney's just about to release his budget, and it's all going to be okay.
Don't even get me going. And number one, so they don't even have enough votes to approve the budget. It's however many months late. Now and then he just dumped the US, going, okay, they're no longer our friends. We're not going to be trade partners anymore. I'm going to go back to, is this just all one big negotiation and things will come back around? I just don't think Carney's that smart. He hasn't proven that that's part of the negotiation. He's over in saying, oh, we're going to start exporting to different parts of Asia. And I'm going, well, why didn't we start doing that 10, 15 years ago? Like our exports have never been, and all of a sudden it's going to change. Our biggest trading partner, we share a border with, US, they are friendly, and we're trying to shut that relationship down. It's nonsensical. I don't understand any of it. It actually frightens me a little bit to think that that's where we're heading. This is not going to be a great picture. And is it just negotiation? Maybe. So is this noise or is it signal? What's happening? I think they're going to get through the negotiation. Here's the concern. Next couple of years, a lot of damage can be done, and it takes a long time to repair that damage.
But it's lasted. I'll be honest with you, Patrick. It has this even. You're right. It's all a negotiation. That's how I feel as well. But this has lasted longer than I thought this would last. They've been at this for. I mean, these threats started, if I remember right. I mean, they didn't take effect until January when Trump got actually into office, but they started when he first got elected in November of last year. Is when it all started. It's been 12 months of this now, and if they're, so I agree, it's all negotiation, but I thought we would have come to an agreement already, and it's definitely taking longer to get there than I would have thought, which means there's some real kind of sticky spots. Otherwise, I think they would have got there.
Well, I think there's a number of things that we have to consider. What gets me fired up about all of it is that the Liberal government is blaming Trump for where we are economically. It's all about the tariffs. And that's just so not true. The rhetoric drives me crazy. Now, I'm not minimizing the impact of what's going on with Trump and his tariffs. But here's the thing about it. We don't have leadership that knows how to negotiate a deal. All these other countries are getting it handled, and yes, there's lots of things back and forth and there's ups and downs and all the rest of it, but they are getting it handled. And then Canada, I mean, 30 or call it 41 million people, 39, 41, whatever the number is, doesn't matter. We're dealing with a country with 10 times the population and the economy that we have, and we're arguing with them. It's like taking a knife to a gunfight, I guess could be the expression. We don't have a lot of negotiating power. And as a matter of fact, if we were smart, when we look at what the US needs, we have everything they need.
Well, that's exactly my point. Is I'm not sure I agree we don't have negotiating power. I don't know how I feel about that, but what we do have is we do have what they need. We have what they need, and we have what the whole freaking world needs. But we need to do a much better job of using that to our advantage and to enrich this country. And if you look at other countries that have a lot of the same resources we have, Norway as an example, they do a way better job at leveraging their assets than we do. So, I mean, yeah, listen, Patrick, I got to go back to what I've been saying from the get-go. Patrick for Prime Minister. Patrick for Prime Minister. Patrick for Prime Minister.
I'm so not qualified, nor am I interested. I would not be good. I would not be good.
But back to what you're saying, though, is, and I have no, I had no doubt that the news was going to use this, and the liberals and every political platform is going to use Trump. And if it wasn't the Trump thing, it would be something else. They're Patrick. That's what they do. They just use the most recent thing in order to blame the lack of effectiveness, the lack of productivity. And listen, if you hired a CEO, Patrick, and it took the guy 6-7 months to take charge and to put out a budget and to actually get going, I mean, what would you think of that CEO? Would you think I'd need another CEO? Like, I don't think I made the right choice. Like, that's what I'd be thinking if I made that decision. You know what I'm saying?
This is my, huge buttons around this whole federal government and their lack of ability and competency. And here's the fundamental around all of it. There's no accountability. And so we have what I would consider incompetent government, an incompetent leader, and there's no way for us to hold them accountable. And then they got elbows up, voted in because, and when you listen and look at the kind of how things unfolded, Carnegie won because of tariffs and the fight against Trump. But ultimately he just caved like a cheap tent. And now he's off gallivanting around the country doing whatever he's doing with other countries saying we're going to make this deal, and the US is out, we're not their friends. Like, it's, and he's literally saying that we're into a new world order. Like, he's using that language. And so, okay, well, here we go. And I don't know what to do with that. And then
Well, it's
ultimate,
interesting though, Patrick. You and I both read the books by Ray Dalio that talk about the changing world order, and I know right now it looks like the U.S. has all the power, but it's interesting that he's using those exact words because Ray Dalio talked about that. There is a changing world order, and it will shift, and the U.S. will not be at the center of it all. And it's fascinating. There's so many state changes happening all at once right now with AI and with technology and with this stuff and with debt cycles and with the entire financial system right now is being rewritten. You and I have been talking about this since 2021 with regards to Bitcoin and DeFi, which is decentralized finance. And there's so much headway being made in all of these things all at the same time. I mean, it's going to be chaotic for the next 5, 6, 7 years. And I've said it many times. I mean, people should not expect that the chaos is going to go away. I just don't want us, Patrick. I don't want people to interpret that from our show. I don't want people to think like, oh, next, in 8 months, it's going to be better. Oh, next year, it'll be better. It will be better if you make it better, number one. But number two, it's still going to feel very, very chaotic because we're going through all of these state changes all at once. And it's not one thing. They're all happening at once. And that creates a lot of chaos. Patrick, confusion creates chaos. You said it perfectly at the beginning of the show. And that's going to continue to happen. The minute we settle out the one thing, whether it's the U.S. trade deal or whether it's a war, there was one that was somewhat settled recently. The next thing is going to be up, and it's just chaos on top of chaos. And, people are going to have to get used to that for the next half a decade.
well, and it goes back to, monetization and digitization. And when we go over to a CBDC, there's no question that's going to happen. Whether it was in the next couple of years, is it going to take 1 year, 2 years, 3 years? They're all ready to pull the trigger on that. And then we're going to be entering a whole new digital world, dollars wise. We don't need to go down that path. But here's something. Let's transition in this conversation to interest rates, because when we look at what's happening with interest rates, JG, we're recording this show prior to the announcement, but the point is that we're pretty confident that there's going to be a quarter point drop. Here's the thing. How much difference is it really going to make economically? So yes, it's going to be helpful for those with mortgages. Got that. Appreciate that. I'm happy to see a quarter point drop. I think there's some opportunity there. It's not going to turn the housing market around. Anybody who thinks that is absolutely living in dreamland, because it's so much more than housing that we're at the effect of. We've got an economy that is stalling. Now, will a quarter point help? Yes, help, but it's not going to make a significant difference. It will not move the needle in the housing market very much. And it certainly won't move the needle in the investor market. And we have to look at that part of it. And it's more now just what's going on economically.
Well, I'll touch on that a couple different ways, Patrick. Number one is I agree it's not going to move the needle for most investors and in terms of the housing market, and that's because I don't think we have an interest rate problem right now. I think we have a liquidity problem right now. I've talked about that on previous shows. The banks are not lending; they're super tight right now. They see a lot of risk in the market, and until that risk profile goes down for them, they're not going to be loosening up the coffers. And until they loosen up the coffers, this market will not improve, in my opinion. That's number one. But number two, in terms of what it can do for the economy, I agree. It doesn't feel like a quarter point drop will do much. But you continue to availability of capital and the cost of capital is a huge lever to the economy. And it may not be this time, but these drops in interest rate continue to help for sure. And like I said, I can borrow money on a line of credit right now for I think like 6%, which is like that's pretty damn good. Like, it's getting very attractive to say, hey, listen, let's use this money to build a garden suite. Let's use this money to build a basement suite. Let's use this money to invest in real estate. Now, a lot of people like to use their lines of credit. If we stick to the investor world for a second, a lot of people like to use their lines of credit in order to go buy real estate. But that's where the liquidity crisis comes in, because banks aren't letting that happen right now. A lot of them, not some of them are, but a lot of them aren't. But it is creating. I recently, Patrick, talked to another broker, brand new broker that I've never dealt with before, and he's creating some very, very, very interesting products because the brokers are feeling this tightening of the market, and they've been feeling it for a while. And as a result of this, listen, these brokers just want to help their clients. These brokers, mortgage brokers, just want to help guys like you and me and people listening to the show. They just want to put money to work. And the way that they're now starting to look at alternative solutions because the main lenders are just not playing ball like they were and like they should be. So alternative solutions are coming to light now, which is interesting, Patrick. And that's hopefully more of that happens because that way we can use those alternative solutions instead of the main lenders. I really don't care where I get the money, but I want to be able to do more real estate. And in order to do that, I need to be able to go get some money. You know what I'm saying?
So when we look at what's going on at the banks, they're not lending, liquidity is tied up. But JG, we've got a couple charts there. Look at the number of delinquencies that are going up. So think about this. So delinquencies are on the rise. That's just getting started, by the way. So liquidity is drying up because their banks' portfolios, let's just call it a portfolio of all these mortgages, they're really going upside down. We've talked about it on a number of shows, which is to say that they've lending at 80% loan to value, and now those property values are far under water when it comes to what they have on their books. So the banks
I
are
don't.
being
But let's not feed that narrative too much, Patrick, because I agree there. If you bought a condo at the tippy top and you got 80% LTV on it, yes, perhaps that condo's worth less than 80% of what it was worth, maybe, but not the average single family, not the average property that most of the people investing in are. It's not. There's no way it's 20%.
this isn't about just about investors. And yes, JG, it is thousands of condos, not hundreds, thousands of condos that are upside down. And it's not, okay, let's go back a little bit. It's not just the end user and or the investor. Think about the developers that have no sales on the pre-construction. So this is of epic proportion. And I know that you may not agree, but I have been really paying attention to this, and banks are upside down a lot. Their portfolios are not healthy, and they're freaking out.
Well, let's you know what, number one, it's not that I don't agree because I do agree that to the banks, the average investor, unless you're exclusively invested in condos, you're feeling the pain. If you're not exclusively invested in condos, you're not necessarily feeling the pain that you're referring to, Patrick. But the banks are feeling that pain because they are financing everybody, right? So they're the ones backstopping this whole thing. So I do agree, and I want to show those charts you're talking about because definitely the big six banks have seen mortgage arrears go up quite significantly. I mean, National Bank, they're up 60%, BMO, they're up 50%, TD, they're up 45%, RBC 40%, so on and so forth. So definitely the mortgage arrears are up. Delinquencies, you can see this chart here. Now, here's the thing. Delinquencies in retrospect to all time, they're actually quite low, Patrick. If you look, this chart goes back to all the way back to 1995. But it's not that, yes, in totality, the delinquencies are quite low, but they're on the rise pretty significantly. And they're up from essentially just below, they're probably about 7,000, and now they're touching on 10,000. So again, this is a signal for the bank like, hey, we may have a serious problem here. And powers of sales, same thing. Those are up significantly, Patrick. Man, we went in terms of
Okay, but let's
power of
back up.
sale
Let's just
listings.
back up a little bit, JG. Let's back up a
Okay,
little bit. Let's be clear
do
here.
it.
So yes, delinquencies and all what you're saying, this is in kind of on the private sector. What this isn't showing, what this isn't illustrating, is the commercial lending. So again, I go back to the developers and I go back to the builders and the commercial, because they fall under a commercial umbrella. So that isn't what's showing up on these. So if you add that to the mix, the banks are puckered up. They are going, hold on here just a minute. And that's what it's done, though, is given rise to new different lenders. You just illustrated it. Those we'll call them B lenders, but ultimately they're setting up for private lenders to step in and pick up the slack at a higher rate. The point is that the whole lending, mortgage, that we're just at the tipping point of this shift, and it's going to get really messy, I think. Now, having said that, and I want to really just emphasize one thing, this is within the chaos is where investors have opportunity. And so I want to be cautious to say that for those investors who stay committed and pay attention and go out and solve problems, there's lots of opportunity within this chaos is what I'm seeing showing up.
Oh, there's no doubt about it, Patrick, and that's why I've been on that train for the last shit. I mean, I've been on that train for the last 18 months, taking advantage of all that chaos, doubling down. What's making it difficult right now for the average, and forget the average, what's making it difficult for all investors, including me, including you, is just the liquidity. I mean, the liquidity's not there, and I don't know how long it's going to take. Albeit, I will say that there's a couple deals that a month ago I was referencing on this show, and it was like really, really sticky. It looks like I'll be able to pull those deals together, but it's just like, yeah, it's just it's a lot of work. It's a lot of work. It is very painful. It's an incredible emotional roller coaster. It's unbelievable, and the average person, they don't want none of that shit when it comes to real estate. They just want like good old steady real estate. And there are some tactics that I'll be speaking about, some of those kind of new age tactics, Patrick, the newfound tactics where the cycle is going, in my opinion. We'll be talking about those this weekend at the Wealth Genius event, the Expand event, which you and I are both speaking at. So, hopefully some people from this show are going to see us there at that event.
Well, it is an interesting time. There's no doubt about it. People are afraid. I sadly, when I look into the future state of things, as we start to see, I have no question about it. We're going to see unemployment rise. Let's go back to interest rates a little bit, and I think we're on the verge. We're at the tipping point. I'll go on record as saying is I think we're about to enter a very dark stagflation kind of time. And what do I mean by that? I think we're going to see rates stay relatively low because the bank's having to juggle between keeping an economy going and managing inflation. And I think they're going to opt for trying to keep an economy going, which means that we're going to see inflation continue. Prices are going to continue to rise, and we're going to see unemployment go up, which is really an environment of stagflation, and I think that's where we're heading. That's where all indicators are going, sadly.
Yeah, you mentioned that in the past, Patrick, and it'll be curious and interesting to see where that goes. Before we talk about inflation, though, I want to give this final pro tip to people. Like, if there's a real keener that's listening to us right now that's like, listen, I really want to do deals. It's a great time. The people that are paying attention, there are some phenomenal deals. I was offered 3 complete portfolios last week. Like, I'm not talking about one building. I'm talking about a portfolio. I'm talking about 10, 20, 30 doors a shot. And here's the real keener pro tip that I have for people is now's the time for VTBs. Now is your perfect moment for vendor take back mortgages. Double down on those suckers. Put them in your deals. Try to get a VTB through. A lot of people that want to sell have to sell. And they are now, and when I say they have to sell, I just mean there's a lot of people, Patrick. The one trend I am seeing, there's a lot of, I don't know, let's call them, I was going to call them old dogs, but I don't feel right calling them that. But there's a lot of older people that have been in real estate for 20, 30, 40, 50, 60 years. They have their money, and they're like, you know what? I'm just tired of the pain here. Just take me out. Just like, take my portfolio. I'll finance the sucker for you. Just get out of here. So I'm seeing a lot of that right now, which is great. It's a perfect opportunity for people like me, maybe not like you because you're not that interested anymore, but other people that are younger say, listen, I'll ride this next wave of real estate. Those people will finance a good part of that portfolio for you, and that's a huge opportunity for the right person.
Yeah, vendor take back mortgages, agreements for sale. Those are 2 strategies right now that are, perfect setup. for being able to acquire and to sell. And let's face it, JG, if somebody wants out bad enough, they're going to have to get creative on their exit strategy because of the liquidity challenges. So they may have to be in that space of vendor take back and or agreements for sale. And that's how they're going to be able to exit their portfolio. And beyond that, if they don't do that, they're going to be sitting on it. So
And
understanding.
a lot of the older people that have portfolios, Patrick, not only are they open to vendor takebacks, they understand the benefits of a vendor takeback. A vendor takeback mortgage is very advantageous to the person selling, very advantageous. And you have to be at a certain sophistication in real estate to understand those advantages. The average Joe doesn't understand them. But a lot of those people that have done really well in real estate say, you know what? I'm happy to exit over the next 5 years. I'll defer all my capital. I'll defer a good chunk of my capital gains over time. So let's do it. It's a huge opportunity at this moment.
And so I want to expand on one thing about, the acquisition, because we get a little bit of pushback, and I certainly get a lot, well, I shouldn't say a lot, but some pushback in terms of why are you even talking about investing right now? Because I think this is where the opportunity is in amongst the chaos. But I do want to qualify something, JG, and I'm seeing this more and more. I've been a fan of tertiary markets, and what I refer to as tertiary market is get out of the major CMAs, the like the big cities. It doesn't matter. I don't care if it's Toronto or Vancouver or Edmonton or Calgary. If we go that way, could be Regina. The point is that the surrounding markets, those municipalities, those bedroom communities close to the city, are where I would suggest people consider investing in real estate. And here's why. What we are seeing, undeniable, every major city is having these shifts of their municipal governments. We've talked extensively about Edmonton's 15-minute cities, but when you look across the country, is there a city that doesn't seem to be going down the toilet? We're seeing crime go up in Toronto, as a matter of fact. Recent report, people are more concerned with crime than they are the cost of housing. I think that's what it was, or cost of housing. They're more concerned with crime than they are affordability. Here's my point. Cities, the what we call the inner cities, are expanding. We're seeing tent cities. We're seeing food bank lineups. So the major cities are being problematic in terms of lifestyle, quality of life within that city, the crime going up, drugs, all the things that are happening. And people are going to go to affordability and to lifestyle, which is in the smaller centers that support the city. And they may not prefer it, but from a lifestyle point of view, they're commutable.
Well, Patrick, I'm 100% on board with that. As you know, I invest in a lot of those same communities you're talking about, the tertiary, the B and C markets that are just outside of those metropolitan areas. But what I will say is those are where that is specifically where the liquidity crisis is happening. Just so you know, like I have lots of property in Lindsay, Ontario, which is a city of Kawartha Lakes, which is like about an hour and a half from Toronto, which is just beside Peterborough. And I have lots of deals that lenders, very good, reputable lenders, have lent in that market for the last 5-6 years since I've been investing there. And now all of a sudden I'm like, hey, I want to buy this new property. Like, oh no, we don't like that market anymore. I'm like, what the hell are you talking about? You don't like that market anymore? Oh no, it's too far from Toronto all of a sudden. I'm like, you literally financed 6 other of my properties there. How come all of a sudden this market's no good anymore? But that's them making liquidity adjustments just in order to manage their risk. And I want every investor to hear this. When you hear that, you have to be very sure on 2 things. One, you have to be very sure that you've done the economic research of what's actually supporting that city, because they could be right. And what I mean by that is maybe they know something you don't. Maybe the economic fundamentals have changed in that smaller municipality. So I would encourage you to go double check your numbers. But if you are sure about your numbers, get ready, because there's going to be some phenomenal deals coming down your way, because those markets definitely, are hampered by these liquidity kind of crunches, if you will. And the solution, by the way, is often credit unions. The local credit unions that are in those cities, that's where you go to go get your money. And because they want to support that city because it's their city. So there's a little pro tip. Patrick, I'm just trying to get some real estate pro tips in there for our listeners. I'm trying to get down to the goods.
Well, the credit union, you make a good point. The credit unions are there. They want to support and they've got their pulse on the community, right? So if they're lending, they have some reasons to be confident in what's going on economically. What we ultimately have to look at, JG, from an investor point of view, we look at a lot of different economic fundamentals, but the biggest one is jobs. Are people working in that city? And if they are, what are the jobs? Are they sustainable? And do you have a long-term vision of whatever it is driving that employment? Because if you don't have employment, you got a problem, and that's what we have to pay attention to.
Patrick, you know what the irony of that is? You're 100% right. And a lot of these communities, the major employers are your very favorite thing, the government. There's the major employers are like the ministries that operate there, the hospitals, all the school boards, all those regional centers that get a lot of that municipal, provincial, federal money. They are often the biggest employers. Well, we got more numbers showing, Patrick, that's just getting bigger and bigger.
It just doesn't stop, does it? And what's sad about it all is that somebody pushed back. I had put something on X, and somebody pushed back and said, "Yeah, well, obviously you just don't care that we don't have enough police force or enough fire department or whatever their story was." And I'm going, "No, I don't have a problem with that at all. But don't think for a second that's what they're doing. They're not hiring more RCMP. They talk about it. They still haven't done it. So, what are they hiring? They're hiring more bureaucrats to do more studies, to look and lift the hood on some other distraction that they've got. It's just more bureaucrats. That's the challenge. That's what fires me up. If they were hiring RCMP, if they were getting public sector, those kinds of jobs, I'd be all over it. Great, awesome, we need it. Obviously, the crime rate's through the roof, but that's not what they're doing.
Now let's talk about inflation, Patrick, because we touched on it a while ago, but we didn't really get into it. But inflation right now is, as you call it, the CPI, which is the CPI, but it's a lie, is clocking in right now at 2.4%. But I love this next chart, which is showing each particular category: food, services, healthcare, the core, and so on and so forth. And that's what the CPI is, typically core inflation, which is they measure at 2.4% right now. But food is up 3.8%. I mean, it's a very popular topic of conversation is how much is your grocery bill? How much is your grocery bill? And I'm shocked by people's grocery bills. I mean, it's crazy. People are spending almost $2,000 a month on their grocery bill. And I'm like, holy shit, man, that's a lot of dough.
Well, somebody just posted recently that they showed the tag, and I don't know what store it was at, but anyways, the price of the chunk of meat that they were showing was $99 a kilogram. Are you kidding me? Like, it's off the charts. So here's definitely what's happening, and this goes back to why interest rates aren't going to make a big difference in terms of housing, is that, and they're not going to have an impact on affordability. So I want to hit on a couple things. First off, we have Carney saying, buildings up 14%. Not true. A lot of affordable housing and or rentals are going up. That's what that all is. There is no new building of homes. Or very, very little. Toronto, in terms of home development and sales, is shut down. Like, it's just shut down. They instead of 12,000 homes, they sold like 1,200. So that whole market is shut down. And then we look at the affordability from an aspect of, even if housing prices come down a bit, there's no buyers there because the affordability has been offset by the cost of living, things like food. So it's just such a weird, like, we've never been through this before. I mean, I've been through recessions before, nothing like this. There's so many different dynamics to it to try and work through. And when you look into the future state, it's going to be like this for the next year or two. Sadly, I don't see a big shift
for the next 7 years, I think. But I want to dig into what you just said, Patrick. But before I do, I want to clarify something. So Carney came out, and I'm putting the tweet here on the screen. So Carney came out and says, hey, great news. Housing starts are up 14%. housing's going to get cheaper. That's what he says on X here in this particular case. And what you're saying, Patrick, is that's not true, because most of those housing starts are not single family homes. Most of those housing starts are rentals, affordable unit rentals. And I agree. So that's fantastic, but that doesn't impact the cost of home ownership. That just makes it so, yes, we're gonna add rental supply to the market, which is great, and we need that, but it's not going to impact the ability of first-time home buyers to get into the market, which of course that's what he's going after, because he wants more votes, probably because there's going to be a midterm election. Hopefully there is. Anyways, I digress. But you got this other awesome chart, Patrick, that you put up here of 2004 to 2024 in terms of the different the amounts. In 2004, we built just under 45,000 single detached homes. In 2024, that number 12,000. So that's four times less. That's a big number. And the population compared to 2004, where was our population in 2004? You have a chart on this. Let me just pull it up here just to show. Okay, right here. So in 2004, the population was about 32 million in 2004. About 32 million. Now the population is 42 million, 43 million, and we're building four times less single family homes. Go figure.
Okay, so this is where, JG, this is the difficult part with people, right? Us included. So I don't want to, but it takes some critical thinking, and it takes connecting the dots and looking into the future. So when we connect the dots, we say, well, right now it's a very emotional time. We've got politics, we've got a downturn, we've got Trump, we've got wars. It's very emotional, very uncertain. And I get it all, right? We get into it, but we have to step back from it and say, okay, well, if we connect the dots, where's the opportunity? Well, what we know is that right now they touch the brake on the population growth, got it. But the reality of it is that we're going to run into a part where people don't have enough. Where do we live? We're not building homes. That means the rental market, we will turn into, if we continue this, it will be in fact the nation of renters. We're heading that direction. And so the point of it is,
you and I called that, though, and I say you and I, but it was actually you and REIN called that in like 20. I remember hearing that in like 2015, and I was like, it was just such a shocking statement to me. I was like, I'm going to start tracking this. And the switch that has happened just in the last 10 years in terms of how home ownership has drastically went down and rentals have drastically gone up. And you were 100% bang on, Patrick.
So this is where the direction of things are going. So if we connect the dots, if we take the emotion out of it, look at data, just keep connecting the dots, the opportunity within the rental market remains strong. If you're paying attention to regionally where you're at, jobs, population growth, et cetera, that rental market's not going away. And so there's where the opportunity lives. The challenge is that you have to be able to look 2, 3, 5 years down the road, place capital, manage that asset really well. And that's kind of where you got to go, because you got to look into the future. And that's where the risk seems to be. But it seems pretty obvious right now. I mean, when you look at it, take the emotion out of it, of what's happening right now today in the market, and say, well, what's the consequence of this? And the consequence is renter nation, renters are going to need a place to live. We're going to continue to build. And then we say, well, where do they want to live? They're going to want to live where there are jobs, lifestyle, affordability.
So all the jobs are going to the government. So just build wherever the government is. So we should all be investing in Ottawa right now, I guess. Is that what you're saying, Patrick? Is that what you're saying? But let's end the show by going back one topic, Patrick, because you said something interesting there. You said, you've been doing this yourself in real estate, in business. You've been a business owner now for over 40 years. It's been probably approaching 45 years now. Shit, you're getting old, brother. Anyways, I digress. But 45 years, you've been through several recessions. You often talk about, the 80s and the late 80s and the early 90s and the 2000s and the 2008. So you're going on like 4 or 5 recessions now you've been through. I have my take on why this one feels different for you. But before I give you my take, why do you think this one feels so different?
Well, because it's not just isolated to a specific, in this case, country or province or city. This is a very global, macro. It's every country is dealing with the same fundamental issues. rising costs, lack of affordability, uh, central, like major cities. So the CMAs are, crime is rising. We're having immigration come in. The immigrants are not assimilating to the culture of the country that they're moving into. As a matter of fact, they're pushing back, and the governments are saying, okay, yeah, well, we got to be really nice to these people. So there's a whole mess of things that are happening that haven't happened in the past. We haven't had these kind of global issues since what, World War II or whatever it's been. The point is that that's what we're bumping up against, and that's why so much uncertainty is there. And let's face it, our governments, just really clear, our government leaders, our politicians are really just what's the word, they're executing on NGOs orders. So in other words, we got NGOs, and we'll use the World Economic Forum, or we'll use the World Health Organization, are telling our politicians what to do. This is the agenda, execute, go do this, go do that. That's what's unfolding. And I don't, a year ago, or even, and certainly 5 years ago, that would have been conspiracy. I mean, some people still to this day say it's conspiracy, but it's there. It's right in front of us. It's actually happening, and they're actually using the language. So I don't think it's not, it's beyond question. It's what's unfolding. So that's what's different.
Interesting. Yeah, no, I mean, I think I'm curious to see, I'd be curious to go back in the early 80s, the first Trudeau government, and to see, the impact NGOs had back then. Like it's very difficult to, it's hard to go back and have a look, but if there was a way, it'd be fascinating. I would chalk it up, Patrick.
But JG, sorry to interrupt, and I think you make a really good point there. We don't know, but here's the fundamental: because we didn't have the technology, we didn't have the level of communication, we didn't have social platforms, we didn't have Facebook, we don't have X and TikTok and all the other platforms that are out there. So what's happening is we're seeing what's happening in the world more than we were able to see it before.
Well, and that's what I was going to say, Patrick, is I'm chalking it up to there's two major things that that make this feel different. First of all, is the level and the depth of information that we all have access to. In the past, you could not, you're a very curious human being. You're very smart, you're very curious, you're very intellectual. You want to piece these things together. You couldn't have done it. Like literally, there was no way for you to do it in 1980. Like you would have read a couple newspaper articles, you would have thought about it, you would have talked to a couple buddies at the bar, or at, yeah. And that was it. Like that would have been your idea of piecing it together. Today, you could spend literally weeks on YouTube digging into every single part of this between YouTube and X and social. And now with AI, you can come up with incredible theories. And that's everyone is going through that because they each have their own level of information. And I even see it, Patrick, in, my in-laws, and I see it in other older people who are, interestingly enough, not influenced at all by the news anymore, but incredibly influenced by social media. And it's like, it's funny how it's just shifted. So information is the first thing that makes this completely different, and our interpretation of that information, because it's one thing to have information, it's another thing to interpret that information. And are you interpreting it right? Are you interpreting it wrong? I mean, that's all in the eye of the beholder, if you will. So that's interesting. And then I think the second thing, which is people can feel it in their core, is there is just a state change happening. Everything is shifting around them. From everything is just shifting, right? To like I said, the financial system is shifting, technology is shifting, AI is shifting, cars are driving themselves, and this is just starting to have a compounding effect on people. And I think those two things is why this one feels very different for people, and they don't quite know how to do it, what to do with it yet. And that's very fair, because there's a lot of shit happening.
There is. And given AI, we talk about AI and information and platforms and all the rest of it there, and when you start to see the quality of what's happening with AI in terms of what they can produce, it literally is, believe absolutely nothing that you see and only half of what you hear, because, and that's, I mean, you got to sort through that mess. And then you've got a
And
government
it's
that,
just starting, dude. Think about this. AI is as bad as it's ever going to get right now. Like right now, it's as bad as it's ever going to get. It only gets better from here. That is just nuts.
It is nuts. And then you get a government that lies. That's just the other side of it. So people are going, "What the hell? What do I do?"
I think they've always lied, though. I don't think that's any different. They've always
Well, I
lied.
think,
That's
yeah, maybe the volume's just
you
turned up.
might. I think we're more aware of it now because of the information flow. I think we're more aware of it, but I think it's. I don't think that part's changed. I think they're all the same. All right, Patrick, let's get to some YouTube comments. I'm loving all the YouTube comments people are dropping. A lot about gold, Patrick. I think you struck a nerve with your, as you call it, the gold bugs. The gold bugs were listening in the last couple of weeks. So let's talk about this, and I'll throw a comment at you. So Terry Moore 861 says, strange how the value of gold keeps going up when the extraction slash mining costs by the owners of gold mines, the banks, have not increased. Guess who's being taken for a ride? Interesting comment, Patrick.
Well, I mean, that's always an argument. It's like whether it's gold or corporations, people push against businesses making money. That's always a button for them. Yeah, finally, many of the miners are actually able to make a profit, actually have some cash. So there's a side of it that, leading up to this, right now they're making more money. I don't know if that's what I'm understanding from that particular comment. That's what it's going to be. At the end of the day, we see gold rise. It's going to pull back for a while. It's going to be a little bit of a rough ride. We talk about gold. I believe in gold right now as another, opportunity to place some capital and let it ride. But, that's going to be up to individuals.
Patrick, the next one, and I find this one interesting, is Canadian underscore A underscore I believe it is. The structure of the market is changing. This is a fundamental shift that is making real estate less attractive to investors for the foreseeable future. What's driving it? The associated policy shifts is demographics. So I think in this person's thoughts is the demographics is influencing policy shifts, which is influencing the market and making it less attractive. Thoughts on that, Patrick?
Well, I don't know. Everybody, and myself included, we want to kind of simplify it, try and make it all make sense, and we just can't because there's so many factors, and there's so many things that influence both the real estate side of things and what's happening in the world of precious metals or equities, because we've got monetary policies that changing. So I don't know what to really to say about this. We don't want housing to be an economic driver, for example, but the reality of it is it was. Now we're at the effect of the fact that it's being shut down and it's slowing down, and we don't have any other way for a country to generate revenue. And we got manufacturing in Ontario that's kind of put on pause. We got housing put on pause. We've got a prime minister that's doing some other trade negotiations with the East, we'll call it. And we're shutting down negotiations with the US. So I don't even know what to say about it all right now. It's everything's kind of in limbo. We don't know where things are going.
Well, I'll take a different approach to this one, Patrick, which is, speaking of policy shifts, we didn't talk too much about it on this episode, but we do got to talk about it on the next episode with regards to the missing middle and that whole concept of where real estate is going. The one thing that is fascinating here is that, I mean, they're right. Policy does shift, and where the policy goes, and where the market goes, and where the market cycle goes, really does influence how you play the real estate game. Now, someone else, and I'm going to tie two comments together. Someone else made a really long comment. It's a great comment about kind of I think they were referencing me wanting a scenario for a bull market. And I think that and they're referencing that I have agents on the ground. I don't have real estate agents. I don't sell real estate. I have a property management and a developer business and a construction business. But if you're in that business the way I'm in the business, you have two choices when the market shifts like this. Either shift your business to go to where the market is going, do like Wayne Gretzky and skate to where the puck is going, not where the puck is right now, or you get out of the business altogether, Patrick. And I think that this is where, and people from this show have to figure out which camp they're in, is do they believe in real estate investing or not? And if they're already in the real estate investing game and they do believe in real estate investing, then where do you think it's going? And how do you position yourself there before the wave gets there? Because the real estate market is shifting. I think this person is making a great point, which is the structure of the market is changing. And that's what we're talking about. We can talk about that and the missing middle on the next segment. But the fact is that it is shifting, and you're going to have a choice to make, which is, do you let it shift from underneath your feet and do nothing? Or do you position yourself where you think it's shifting? And I think that that's a big a question people have to answer for themselves. I know for me, it's not that I want, of course I want a bull market. Anyone who's heavily invested in real estate is going to want a bull market for sure. But what I do is I position myself where I think the market is going before it gets there. And the things I talk about on this very show, from the stages I speak on to podcasts I appear on to the websites and the services I provide through my company, are exactly those services. And that's exactly where I think the market is going. I talk about coach homes. I talk about secondary suites. I talk about duplexes. That's all the missing middle, because I think that's where the market is going, because I do think the structure has changed, and I'm positioning myself for where it's going. So those are my thoughts, Patrick. Long-winded, but great comment. Thank you.
Nope, and well said. I couldn't agree more.
Well, Patrick, it's been a pretty incredible episode 76. The producers really wanted us to get this done in less than an hour, and I think we've accomplished it. We talked about BC real estate investors. We talked about curveballs. We talked about interest rates. We talked about standard of living. We talked about the economy, the CPI, the CPI, the inflation. We talked about it all. It's been a great show. Thanks for doing it, buddy.
Thanks, JG. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.